today I wanted to discuss something about Forex. If you are a new Forex trader, there is something you must know. So that's the main aim of this slide. You want to trade Forex, okay? It's a good thing. And Forex, I always say, is a profession. You cannot use just 1 week and become a profitable Forex trader. No, it doesn't work like that. We go to the university to attain a degree for 4 years. So it takes us 4 years to be able to get a degree. Okay. So the same thing in forex trading. It's a skill that you have to acquire. And if you want to acquire a certain skill, then you should know that you are not going to be perfect or have the full knowledge of it within 1 week, within 2 weeks, or even within 2 months. No. So you start gradually, you start it gradually. Then with time, you get to know how it works. Please hold on. So once you decide to trade forex, then you should be ready to learn. Always don't be in a hurry to trade. No. Your focus as a beginner trader is to gain the knowledge first and practice with demo. But I will always advise that you should not practice with demo for long, because there is no emotions attached to a demo trading. So when you are trading demo, it's good. It's just for you to know how the system works, and then you switch to a live account. So once you start with a demo account, don't use the demo for so long. The aim of the demo is for you to be able to understand how the forex market works. It's for you to know how the market mechanics works. Then you switch to a real account. Now, when you start with a real account, you do not have to deposit a huge amount just within a shortest possible time trying to trade, because you are a beginner. So once you are a beginner, what you have to do is to use small amounts to start. First, test your account with that small amount. For example, 100 USD account. If you have 100 USD account as a beginner, then you use that, take a small risk. And as I've been telling you, one thing that is very important in trading is your lot size. I always say that if you are going to be very good, then it depends on your lot size. Your lot size will determine how long you are going to be in the trade. It's going to determine your profit and loss level. So you have to invest much knowledge in calculation of lot size. So I have done a video on that, lot size calculation. So based on account size and then the lot size that you have to use. So if you have 100 USD account and then you want to start with trading, then there is a specific lot size that you will have to use. Okay, so for example, we have about 3 types of lot size. We have 3 types of lot size, and each of these 3 types relate with a certain account size. For example, you have 100 USD account. The type of lot size you can use is a micro lot size. A micro lot size. A micro lot size is usually 1,000 units of currency pair. 1,000 units of currency pair. So usually a lot size of 0.01, 0.01 to 0.09. Any lot size within this range is a micro size. So when you have $100 account, then you have to use a micro lot size for your trading. Now, even with a $100 account, depending on the currency pair you are trading. So, for example, if you are trading gold and you have a 100 USD account, the micro lot size that you have to use is between 0.01 to 0.05, maximum 0.05. So even using 0.06 micro lots is too much for a $100 account. Okay, so always make sure you understand lot size and the correlation between a lot size, your account, and the pip movement, because whatever lot size you use has a direct correlation with pip movement. So for example, if you are using a 0.01 lot size and then the market moves 1 pip, you are going to make a 0.1 dollar. So you have 0.01 lot size, market move just 1 pip, you make 0.1 lot size, 0.1 dollar. If the market move 2 pips, you make 0.2 dollar. That is using a micro lot size like 0.01. If you're using 0.02 lot size and the market moves just 1 pip, you are going to make 0.2 dollar per pip. Let's change that to let's say a standard lot size. A standard lot size is another type of lot size. A standard lot size is a is when the market moves 100,000 units per currency pair. So usually the standard lot size, what we are saying is that when you are using a standard lot size like 1, 2, 3, then if your lot size is, let's say, 1 and the market moves just 1 pip, you make $10. So if the market moves 1 pip and then you are going to make $10 just because you are using a standard lot size of 1. Let's say you are using a standard lot size of 2 as a whole number, you are using that as a standard lot size. Once you are using 2 as a standard lot size, you should understand that just 1 pip, you are going to make $20. And then if the market goes in the opposite direction of just 1 pip, you're going to lose $20. So assuming that you have a $100 account and then you are using a standard lot size of 2 and the market moves just 1 pip in the opposite direction, what happens is that you're going to lose $20. So already just 1 pip movement against you, you are going to lose what? You are going to lose what? $20. So imagine the market is moving 2 pips, 3 pips in the opposite direction. You are going to blow your account. Meanwhile, it's just 2 or 3 pips movement. So you, as a trader, you must understand, you must learn how to calculate lot size very well. You must learn it. That's why I always try to update you guys on lot size, how to calculate your support, how to calculate your resistance, how to calculate your pivot, how to calculate the last price on the market. So always make sure you are investing much knowledge in this thing. You're going to make a lot. And Forex, it's not about making money faster. It's about growing the little account you have. So for example, always you must have a target for yourself. So guys, once you join, make sure you like and share. And then if you've not subscribed to the channel yet, make sure you subscribe as well. So always make sure skill is here. Yes, so Forex is a skill that you acquire. Okay, the very first day you decide to trade, to be a Forex trader, then you should have it in mind that you are going to learn a skill that you are going to live your life on the rest of your life. So investing much in that is very crucial for your success in the forex market. So always make sure you learn it very well. You learn it very well. You see, forex can change your life and it can also ruin your life depending of your approach. How you approach the market will determine how the market is going to treat you. Always you need to understand the market. Before the market understand the way you think, you should rather understand the way the market behaves. So you open your charts, you look at it, then you know that this and that is what is going to happen within the next 1 or 2 hours or within the next days. So because of that, you will know the necessary decision to take. So guys, if you just joined, make sure you subscribe, also like and share. If you have any questions, just put it at the comment section and then I'll respond to all your questions in relation to forex trading. Anything that you want to know about forex, make sure that you ask and then I'll respond to that. Okay, so I'm waiting for respond to those questions. Okay, so always understand your lot size, how it relates to your peak movement, and also how it affects your account. So you don't just use lot size because you want to make money fast. No, it depends on your account size. Depends on your account size. So for example, if you are using a mini lot size is a 10,000 unit of currency pair. So in a mini lot size, one pip movement give us $1. So one pip movement give us $1. So if you are using example 0.1 lot size, that is a mini lot size. So in between 0.1 to 0.9, this lot size, any lot size between that is what we call a mini lot size. So a mini lot size of 0.1, when the market moves one pip, you make $1. When the market moves two pips, you make $2. If you are using a mini lot size of 0.2 and the market moves just one pip, you are going to make what? $2. When the market moves two pips, you're going to make what? $4. So if you understand this, trading becomes easy for you. Growing your account becomes easy for you. So guys, once you join, make sure you like and share. If you have any questions, just ask. So this live is our forex trading. Anything that you want to know about forex trading, you can just ask and then I'm here to address that. So make sure you like and share as well. Okay, so always make sure you understand the correlation between your lot size, your pip movement, and your account, because that is going to determine how long you're going to be on the market, your success rate, and then your profitability rate. So if you are going to be profitable or not profitable, it will depend on this. Now the next thing I want to talk about is the market itself as a language. So for example, if I want to learn English, then I'll have to make time, try to learn it. Okay, try to understand the language and then speak it. So first of all, you need to understand the language and then the language of the market, and you flow with it. It's as simple as that. So sometimes if I see somebody sitting behind the charts the whole day, that is a sign that this person do not know how to trade forex. Because once you understand the market, you open your charts early in the morning. Maybe usually what I do is I wake up 4 a.m. and then I analyze my markets. I like trading in the London section most of the time. I trade during the London section most of the time, and then in section. So you analyze your markets early in the morning, you demarcate your levels, and once you demarcate your levels, you just leave the market alone. You can place an alarm over there at your levels. Once the market hits that level, you'll be notified that the market is at your level. Then you go open your chart, sit behind it, then look at what the market is doing at your level. So if the market is creating a resistance or the market is creating a support at your level, then you know that it's now time for you to enter the trade. So before you enter the trade, first of all, you have to wait for the market to be at your level of interest. So as a professional trader, you must always have a level, always have a demarcated level that you are expecting the market to reach, and then you look for a signal. So if the market reach your level, your alarm notified you that, oh, the market is at your level. The next thing you're going to do, open your charts, look at it very well. What are you looking at your level before you enter the market? That is the most important thing. Now the market is at a level, maybe the market is at the support level that I have demarcated. Now I've been notified, I've opened my chart, the market is indeed at the support level. Then the question I will ask myself, when am I going to enter the market? When? It is one, when the market creates a support at my support level. That is one. So you've seen a well-defined support created at your support level. That is one. The fact that the market created a support over there does not mean that the market is going to buy, or the market is going to move in an uptrend just because the market has created a support over there. So it depends on the kind of support that is going to be created. And what do I mean by the kind of support? The kind of candlesticks that forms the support. So your understanding of the candlesticks is very important. So you must understand the type of candlesticks created at your support zone. For example, the market created, let's say, an abundant baby at your support zone. Then we are happy, because once the market created an abundant baby around my support zone, that is a signal that the market is going to move in the upward direction. Or if the market creates, let's say, a bullish harami pattern just there, or the market creates, you see a bullish engulfing candlesticks that has engulfed the previous 1 to 2 bearish candles, then you know that now buyers have entered the market fully with huge momentum, and so you're going to enter the market well. Then now, after you've seen your signal for your entry, then the question is, where do you think the market is going to retrace or reverse? That is your TP level, or your take profit zone. So now you've seen it, you've entered your market, and then you entered your stop loss. The next thing is, where is the TP? Where are you going to expect your TP? Usually what I like doing is that I like what we call scale in. I like doing scale in. So when I enter my trade and then I've entered my stop loss, now the next resistance level that I'm expecting to take my TP, I'll place it there. Now, as the market is moving in my direction, let's say I use the 15 minutes time frame for my entry. So after the first 15 minutes candle close in my direction, now I'm in profit for about 15 minutes. So what I will do is that I will enter again, scale in. I'll enter again. Once the previous one is in profit, I'll enter again. I'll enter again. Once the market is in profit, I'll enter again. That's what we call scale in. But this time around, I'll enter again with a reduced loss size. So I'll reduce my loss size. If, for example, I was the first entry that I'm expecting the resistance level to take my TP, let's say I used one standard loss size for that, and then maybe I'm expecting to make, let's say, 1,000 USD when the market hits that TP level. Now, when the market is moving in my favor and then I want to scale in, I'll reduce that lot size to, let's say, 0.5. 0.5. So I'll reduce it to like 0.5. That is, I've reduced it from a standard lot to a mini lot, 0.5. Then that one too, I'll place my stop loss nicely, and then my TP. So as the market is moving in my direction, first of all, the second entry, usually the second entry, if let's say I make $50 profit in the second entry, what I'll do is that I can decide to close that, because that is not the first entry, that is not the first entry. So I can decide to take that $50 profit, and then I'll allow the first entry to continue to be in the trade until it hits my TP. Do you understand? And then even if that market, for example, after I've taken, so now I've taken 50 USD profit, and then I'm looking at, let's say I'm looking at after taking the 50 USD profit, let's say I'm looking at getting 1000 USD from the first entry. So if let's say that one, it did not hit the TP, but when the market hits around your, let's say I'm in a profit of 80, or let's say my target is to get 1000 USD, and the market is around 800 to 900 USD, and then I am seeing a clear signal for rejection, or for a retracement, or for the market to start moving in my opposite direction, I'll just close it. Take my profit, I'm done for that day. So always make sure that you set a target for yourself. In fact, if you want to be you can never be profitable trader without setting a target for yourself. So that's your 100 USD account. You can tell yourself that, me, Rutherford, today I'm looking at making $5 or making $10 profit. And once you make that $10, my brother, no matter whatever you are seeing on the chart, close it and then go your way. Then the following day you come back on the market. That is discipline. So you need to be very disciplined. That's why some of us, we traders, we are very disciplined. When you say no, it's no. Yeah, I'm done. No matter what I'm seeing after the entry, I will never enter, because I'm done. I've gotten what I want for that day, and that is it. When you do that, you realize that you yourself will begin to feel that now you are becoming profitable now. But the moment you do not set a clear target for yourself, and you always want to trade just because, one, your first entry you make profit, second entry you make profit, third entry you make profit, psychologically you might think that you will continue to be making profit just because your first, second, third entries you've made profit. So psychologically you will be deceived that then the rest you're going to make profit. And that is when, if the market is now moving against you, then traders fail to accept that loss. So they'll be looking at the loss until it becomes so big that they won't be able to close it. So always make sure you set a target. Once you hit your target, close. And also, it's not every day that you will get your target. So for example, today you are expecting to make 100 USD profit, and you are down for the day. And let's say today you've made your 100, you close. Tomorrow you've made your 100, you close. On the third day, your first entry you've made a loss. Your second entry you've made a loss. My brother, you are down for the day. Close. So it's not every day that you make profit. You must understand that there's no business that you every blessed day you're gonna make profit. No, it doesn't work like that. Life doesn't work like that. We all must understand that not every day you're gonna make profit. So once you accept that, one, you are not going to be profitable every day, that is a good sign that you are becoming a profitable trader. So guys, make sure you like and share, and then if you have any question, just put it in the comments, all your questions. So I'm willing to answer all your questions concerning forex trading. If you have any questions, let me know. If you have any questions, let me know. If you have any questions, let me know. Any questions, let me know. So this is Router FX. If you are interested in trading forex, you want to learn how to trade, you can join my mentorship class. I don't charge much. Just pay something small and acquire the knowledge. I am always available to teach. So make sure that you get yourself registered and then learn how to trade. In fact, gaining knowledge first is the most important thing, not the money. So first of all, invest in knowledge on the forex market. Invest in knowledge and try to mimic your life. Let your lifestyle mimic your mentor. You will be very profitable within the shortest possible time. Do you understand? So that is it. If you have any question, just ask me and I will. I remember the last time one of my guys asked me how to calculate support, resistance, pivots, last price. This is, you can calculate it. There's a formula for that, but you need the last price, the lowest price the market went that day, and then the highest price the market went that day to calculate for. Hey.